Good evening. This is the Elliott Wave Daily Update for the NASDAQ 100 and the S&P 500 for Thursday, August the 15th, 2024. Not a surprise to get the type of day that we got today, but I will say I was a little bit like, wow. Now, I want to just start by giving an overall picture, and I will go into what really has been behind these nonstop rallies that just don't seem to give up. But I want to start out here on the 4-hour chart, and I'm going to go over the whole thing again. Now, back in mid-July, we hit a high at 20,983.75. And that high marked the completion point for minor wave 3 within an ongoing intermediate wave 3 of a even larger primary wave 5. Looking for a minor fourth wave correction. I ran this box and continued to run this box, and I ran it for at least a month prior to the high actually being put in, to demonstrate no matter how high I got, this was the box that I felt that the corrective phase would come into, and likely, as Elliott taught, will come and find its terminus at the bottom side of the fourth wave of one lesser degree, which happens to be the minute, which was right there. Now, we watched this come down. It came down in a 5-3-5. And at the time, I had labeled it minute A, B, and C, leaving open the potential that it was or could be the completed point for minor wave 4. What prevented it at the time was that the market had not really put in enough time, let's say, that we had the time fractals, the Fibonacci time fractals, that really argued that really shouldn't or couldn't be all of minor wave 4 as we compare those Fib levels, those time fractals, with wave 2 and other moves in the past, and how long they took to unfold in terms of time. Because in actuality, this was July the 11th, and this low was August the 5th. So 3 weeks. Basically, 3 weeks, the market nosedives from 20,900, was it? Yeah, 20,900, all the way down to 17,351. So it was an amazing trip down, and it was quick, and it was brought on for various factors that suddenly got erased. We have to remember there was all that talk about that the Fed needs to have an emergency meeting. They need to step in right away. They need to cut these rates. They need to stop this slaughter. What's happening in our market? Blah, 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 blah. And really, why was it going on? Well, because the Japanese yen, that the risk trade was being removed. And whatever. But there you had it. The Fed didn't do anything. In fact, they left them unchanged. We're rallying anyway. So the narratives: walk in, present, walk out, never heard of again. So what's really causing all of our moves? Again, as unrealistic as it sounds, there are things in the real world that will cause a ripple in any market. One would be a financial meltdown, where just as a surprise, something came out and rates really just started to rapidly rise, if something that were to cause that. If there, an act of war, a world war, would throw a ripple into a market because of what it would do to the surrounding and all of the economies on the globe, when there's a shift to how money. Internally, we have things that could be happening within an economy that would suggest that were really overcooked. In other words, we've gone through a period of inflation for quite some time, and now the Fed, working diligently and consistently, has managed to get inflation down. But the truth is, to me, the truth is on that one is that inflation, yes, it's lower, but depending on where you live, I mean, go to the grocery store. Are food prices really coming down? But how convenient that they take out food and energy when they tell you what the CPI and the PPI are. They take out food and energy for the CPI. Oh, yeah, we're almost down to our target. According to what? Now, that's the way it is. So here we sit. But if we've gone through a pretty steady phase of inflation, this is not all the deflation it's going to take. So that the first hint that we're going to get lower rates and they come charging back in, that may not be the ticket. Just because people are now thinking that cheap money is becoming apparent. That cheap money may not filter down that far. Don't consider that your credit cards are suddenly going to go from 29% to 9%. Don't consider that an auto loan might go from 9% down to 2%. Although, if you're the best of the best of the best, you can get 0%. So this is my point. There are points here that we just got to stick to what's actually happening in front of us and what really is behind all of these types of moves. And again, it is the nature of how other things have been constructed. All of the different instruments that are now attached to volatility. Now, volatility can be suppressed. Now, just in 2 weeks, folks, 2 weeks, we've watched volatility, not even 2 weeks, but almost. We've watched volatility go to 60 and then come all the way back down. Now we're down to $15, $15.35 in the VIX future. So when I'm looking at this, I'm like, wow. So now we have the future and the cash basically at the same level again. And what happens when they reverse things and they got to take the risk off? They got to take the risk on trade. They got to get that risk off. That's because the market's doing this. And what happens when the risk on trade? The market is flying through levels that create a situation where the levels that they're going through should be resistance. And they're usually resistance because there's large amounts of short gamma, whether it's call or put. The gamma is sitting there in a short position. Right now, we're watching both in the S&P and here in the NASDAQ, the market go through these levels. They did it yesterday. They did it here. So that's actually 3 times we've seen large moves coming back for the risk on trade, which is selling the VIX and buying the underlying companies, right? The underlying stocks within these indexes, buying the volatility there. And that volatility equals premium. They're paying premium in the calls. They're paying premium in the options. And that then has gamma, delta, theta, all of those. Those then come into play. Most important is gamma. Gamma is when it gets collected and a level gets broken, it creates the situation where those trades via those traders must make an adjustment. Because let's say, for example, what we got going on here in the NASDAQ, and this is what I present actually in the trade room. And so what I want to make sure that people are becoming aware of is that what truly kind of happens behind all of this. Now, for example, that walking in today in the NASDAQ. So yesterday, the NASDAQ, well, let me start again. coming in today, the NASDAQ had already broken above 19,324. All right. 19,324. Let me open up this chart a little bit and bring it down. Actually, let me bring it down to the hourly chart. So 19,324. 324. Here we are. Right up there. And where are we? Still, the market isn't open yet. So we've gone through it before we open. Now, that level wasn't a gigantic level as far as gamma goes, but it was big enough where traders needed to start by buying to get into a position to rectify an existing position because it exceeded 19,324. Then what caused it to continue was that there was nothing in between. So it was free roads, free, just go put on this trade, nothing to stop it. And we just rose and rose and rose. Now, I want to share with you, and I'm willing to do this because this is what I'm going to be doing in the trade room. And not necessarily bringing it beforehand to this side, to my YouTube updates. Now, fair, unfair, it's very, very valuable information. Now, here's the next level of importance. And it's importance because there are 1, 2, 3 large areas, all sitting at 19,774. 19,774. We've got resistance that should stop this. So let me walk through this. Let me walk through the fact that, yep, I still have it labeled as a minute wave B. My alternate remains the same. Now, I've got new markings down that could literally take us higher and still be this minute B wave, and we turn and come flipping down. Whether we will then do damage to those levels previously, that would have been all based on whether we held lower levels, but we still will likely get down to at least the area of, if it is still within minor 4, we should go down and just exceed the low of minute wave A. Wave C should take out that low. I'm not looking for this whole pattern to be a ABC flat, which means the A wave and the B wave goes up and matches pretty much the A wave, and then we come back down in a C wave. Why? Because the A wave, as marked, was a 535 and not an ABC. So yes, I know it's an ABC, but ABC being 3-wave ABC, 3-wave B, and a 5-wave C. That's what produces a flat, not a 535 followed by an ABC followed by another 5-wave down. Now, could that change? Well, yeah, I suppose it could. But now what I got to look for is what else could it be? But let's first get through this. If the market were to rally strongly, and tomorrow's an expiration, we might still see that they're going to try to do things that just kind of jack this thing up. And that could happen. So breaking 19,774, 75 takes us above these resistance levels. But now I just want to go in and take a look at what we got going on here. 1 of C, 2 of C, 3 of C, 4 of C. So we're in wave 5. 1 of 5, 2 of 5. 1 of 3 of 5, 2 of 3 of 5. 3 of 3 of 5. So 4. So what have we done? 1, 2, 1, 2, 3, 4, 5 of this 3, 4, 5 of this 3. So 1, 2, 3, 4, 5 of 3, and then we still have a 4 and a 5. And we're sitting at, we got as high as 19,603, right? And we're not really dropping off all that much. We're done now, but we didn't drop off all that much. So if we're at the top of a three, we get a little bit of a four, and it comes in as light as all of them have thus far. We're not going to get that far. Maybe we get back down to the 13 at 512, or maybe even down to the 20 at 376. That would be a lot. Yeah, it could do it and still then zip higher. My point here is that how quickly, so not if I just look at all my internals here. This was actually for this wave 5. Actually, was it? No, it was for the third wave. So the third wave came up almost to 2.618 of wave 1. Now, what I got below this is what wave 5 can do against wave 1 when compared to wave 1. Well, we surpassed that 618. That's gone. Next up is 100%, 19,834. That would be for the fifth wave and then the C wave, right? Because then what are we completing? 1, 2, 3, 4, 5. Now, leave that just as it is for just a moment, because what I have, let me go back to my 4-hour chart for just a moment, because I got to go over this whole scenario that I talked about, that could be all we get, and this is the minor 4 here. I've talked about it. I've now moved it. It's still in that alternate position. But now I want to talk to other traders that are looking at my analysis and then building or trying to do positions against it. There's some basic things that I do as a trader, and I teach others that are learning how to trade to have trading rules. And I only have 3 basic trading rules: what my trigger is, what's going to get me in the trade, what my goal is for the trade, but most importantly, where is my stop? Where is my stop loss on the trade? Now, if you're a position trader and you're trying to position because you, as I believe, we still likely have a C wave down to do, and that would return us back to below 18,000. Well, I'd like to participate. I'd like to do that. Or if you're doing it in a stock that would also drop along with the NASDAQ, et cetera, whatever your position is in, and that you're positioned to take advantage of a downside move, where is your stop? Why would you just leave a position on and watch it take everything back, or put you out of business because you're losing more than what you have? You're going to get a margin call, or whatever the situation is. Where are your stops? Those are important things. And so when I'm talking about, for example, that we could go to a particular level if we break, versus at the beginning of the week, or even now, talking about that if we top out and finish this B wave, we could turn and sink pretty quickly. But now I want to tell you the way that it's trading and our next levels, that if they break, it's shoving gamma right down traders' throats. They have to adjust. And because there's 3 levels there that are pretty large, one being the call wall. That call wall is there. Why? Because that's where the shorts are sitting in terms of calls, at 19,775, or maybe at 19,780, whatever the strikes are up there. That's where they're sitting. And if you break through that with a flurry, with power, it forces, what happens is, like, markets moving up, and who's ever holding that position, large or small, they are getting shorter, not longer, shorter as the market rises. That's what happens to that gamma. It makes you shorter as the prices rise. So what do they have to do? They have to buy into that strength. What does that do? It just produces more strength. So that's why I talk about when we break these levels, and when I do it in the trade room, I'm like, when that level's broken, we're going to go to the upside or we're going to go to the downside because it's going to force the adjustments. That is, and when it happens before we actually start trading in our regular session, it's going to make it a little bit quicker to get up and out of there. And we saw some of that this morning. We saw it was based on the numbers, but they kind of came up. And when they broke it, they hung out. They didn't let it come back down. And they just were buying anything that was coming in preparation of that's what was going to happen. And it did. Now, again, going back, here is, if indeed this is minor 4, and I have to change this A and readjust, and I put a 4 here. And this turns into 1, 2, and we're now getting up to wave 3 to finish just wave 3 of a minor 5th wave up. Now, again, I'm not liking these structures, but again, it's a 5th wave. It's not the beginning, it's the end of the move. So it might be a little sloppy, it might be a little tattered, but it has the same up, and particularly the direction, it has that same power to drive. Now, different reason, folks. We're not finding the reasons. There's some of it coming, oh yeah, because the earnings here and the earnings there, this and that. They'll always try to relate something to it. I said if something is basic because people don't understand it. Options convert. All this stuff converts money. And when your position starts working against you, it's costing you money. You will adjust. Now, what this level represents is the area where minor wave 5 will be 1.618 times the length of minor wave 1, not quite to that new high. Could we have a 5th wave failure, or will it actually go the extra 100 points, put in the new high, and then come back down? Well, sure, but there's the 2.618. Am I saying this is where the market is going? No. I am revealing what possibly would happen or could happen if we continue to move up and take out these levels where there are large positions to create resistance. And that is what I'm trying to tell you. And if they get broken, we're going to get another surge higher, because this one that I'm talking about is even bigger. So, and it should be stronger. Put it in the context to the other side of all of this when I was discussing downside, and I was over discussing the S&P, and I was talking about 5,000 being long-term support, not even just short-term, long-term support, been there for a while and likely to remain there now. But if it were to be broken, we would see a very quick flurry, a quick drop, because of the amount of trading that, or just gamma that needed to be covered. Because as it went down, those positions aren't getting short, they're getting long, longer. And every point works strongly against them to the number that they have. So you're going to react, and you're going to have to sell into weakness. Just like here, it's a call wall. It's going to, if it gets broken, they have to buy into the strength. So they'll be adding to that buying need, that strength of the buyers. It ain't going to be because they're bullish. It's because they're covering. They're adjusting. So that's why I don't tend to go like, oh, it's a bullish picture. Yeah, it's a bullish move, sure. By definition, absolutely. The reason behind it, it's not because everybody's getting giddy about the market going up and oh, hallelujah, we're all making money. If you're long, hallelujah, you're doing great. But the reason they're going to have to adjust is because they were short there. Okay, so what can we say? I'm leaving this here, but I'm now laying out pretty cleanly. I don't necessarily think that the market should be trading too far above 19,007, this level right here, 19,720. Now, where's this sit? 774. So they're kind of giving it enough, what I thought, room until, overflow. But we have this resistance. This is just wave 3. So I probably even shouldn't have it there, but I think we can get and then pull back. Because again, it's internal, right? See that color? That's internal. 1, 2, 3. It's the internal. And then outside of that, I have the C wave 1.618 and 19,690. So pretty much almost 19,700. Here we have the 618 for the entire B wave at 19,600. We reached that today. It held. How long will it hold? Not sure. If it breaks, it starts to throw a little bit more weight in the area that this is all of minor 4, and we've already finished it, and we're now going to march higher. But we got to watch to see what happens here, because it's not breaking any rules. That if this is a 535, this can't go above this level. When I hear that, I'm like, in today's market, it sure can. Now, yes, it could still remain in the context of a B wave, because again, we're not really breaking any rules, but it does toss the weight in the fact that maybe it isn't. And we have 1, 2, 3, 4, and a 5, and to finish minor 5. So again, how do we want to trade this? I think that a lot of people who are day traders, a lot easier. Swing traders should be able to get a couple of trades on that be more reflective of these break points. You will get those every day in the trade room. And by the way, today I'm putting that out. And this special, I'm running a promotion in the trade room that it's the regular price for the trade room is $299 a month. I'm running a promo for $200 for your first month. So you can come in, you can check us out, because our daily analysis, what we present each morning, is what we have now observed overnight. We're giving you these numbers, these areas where if this breaks, look for it's going to break. It'll go either substantially higher, or breaks lower, it's going to go much lower due to the adjusting in positions. And we'll go over that. And then we adjust our fibs as the market moves. So your trading can be reflective of that. So there's a lot of additional technical analysis that comes in, but given by both myself and by Sasha. And then also you're following what we're trading. That's going to be another advantage. So day trading, yeah, this is what we're doing. And so the trade room is operational from 6 a.m. to 8 a.m. Pacific daylight time right now. So we give a half hour before to really reflect on what's happened, what's going on, and where our levels will come in. Now, that's all available to join if you would like to. So it's available if you go to tradershelpingtraders.com, and then there's a trade room link, and you just dropped it down and it's right there. You just see it. You can sign up for it, and you can sign up, pay, and I will get notification. We will get you certified within our Discord server, and then you will be a member of the trade room, and you can come trade with us for a month. Again, this promo will run through Labor Day. So from now through September the 2nd, this promo price will be available. Back to the market. I think that what we got going on is we got these levels right now. I'm looking where we need to finish internally, wave 3, come down in a small 4, go back up in a wave 5. And then that That, my friends, hopefully will finish this sub-minuet wave 5, and then the minuet wave C, and the minute wave B. What are our levels? We have 19,690, 19,834, 35, and then 20,397, almost 20,400. I really think that if this market in this format were to get up here, I remember 1, 2, 3, I got a 4, and I got a 5. These I think are very possible because I think if it goes up again, 19,775, if it breaks that level with intensity, just kind of goes through it, it's going to shake it up. Then I think 19,835 is it's a heartbeat. It's a heartbeat away, and then on up. Tomorrow's expiration, it's going to add. It's going to add to the whole thing. Moving averages. Right now, we have the 13 crossing the 4-hour 200, which has gone flat, as it should, because it takes a little longer for it to go up. So we're still 50. Now the 20s crossed the 50, heading up, following the market. So we're not quite there because all of these would have to get across here if it's really going to give us that push. Now, can it? So do you see why sometimes it continues to be a little bit reflective, like, we're strong, but we're not quite making it because our moving averages aren't really going away. I'll even take it out to the daily. We'll take a look on the daily. We got strong, strong, strong. And now, by the way, you can run that, stick it over, I believe it was here or even here, and you would get this right to where it came. That's just measuring. That's just candlestick measures. So that all kind of came through. So again, the 200 still really isn't reacting. The 20 is, but now the 13 needs to get back above the 20, and the 20's got to get above the 50. Not necessarily happening yet. But look at the strength. Could it be finishing? And it is actually going to be that C wave and the B wave, and we're going to turn around and come flying back down. These are the things, the tools that I kind of put together and go like, do I think that we have enough? Is this really, yes, the movement that we're watching every day, it's like, oh, that's pretty bullish. And it's producing a bullish candle on the daily chart. But when it comes down to measuring it via their moving averages, the 50 is still flat. The 200 is still flat. So what power is it really having? It's not having the volume power. That I'll tell you right off the bat. So that's the NASDAQ, complete with a lot of talk going all the way around it. Biggest ones, folks, it's like, I can't dictate, I don't recommend trades, but the one thing I do recommend, work with a trade plan. And your trade plan should include what your trigger, what your goal, and what your stop. Where is your stop? If the trade becomes invalidated, so in other words, you're not going to see that move, or how much do you want to risk waiting for that move? So save yourself. All right, let's go over and take a look at the S&P. Now, the S&P also has been flying through levels. So here we are. We'll start on the daily. I'm going to bring it down. Let me start on that 4-hour chart and just open it up this way. Look at this. We still haven't taken out the high of the minuet B. And so we're in the same position. But look what we came up and touched today, 55.73. Now, walking in today, we had a call wall. I got to take this back down. I got to go down a couple notches. We had a call wall at 55.25, 5,500 in the cash, 55.25 here in the S&P. Where did it hit 55.25? Well, here we are in our opening. We went up, we tested, we went up, we tested. Here we are with now in the next hour, came back down. But when 55.25 held and they started to power, it forced the rest. And you see up, 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 up. Now, you can put a trend line underneath it, and it was kind of relative strength, but it wasn't like it was just like moving, 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 moving. It was pretty slow, actually, and boxy. Excuse me. So, how do we want to count this? Well, we kind of got the same deal. We've got 3, 4. The 4 is right there. 1, 2, 1, 2. So there's this 3 of 3. 4 of 3 got to come in, and a 5 of 3 to finish this third wave, the whole thing, right? 1, 2. So 1, 2, 3, 4, 5 of 3 here, and then we get a 4 and a 5. So we have more upside yet to do, obviously, even under what I think could be a very conservative count in terms of this. So what are we looking at? Let me go here as we try to figure into this. So again, we have where wave 5 would be equal to wave 1 here within this form here at 56.28, 56.29. Now, today, we broke the coal wall, and it also was representative of where was the largest gamma position right there. So when that really kicked in, and they had to start to cover, and it basically kind of a thinnish market, not a lot of heavy volume. They either did it via the options, or they came into the future because of the way the stocks were trading and covered there. And we didn't have tremendous volume today. Let me go back and take a look. Less than 1.5 million contracts, which normally you would think it would be 2 million or 3 million. In NASDAQ, 517,000, which is kind of norm for the day, between 5, 6, 700,000. So these were moving very large, 453 points in the NASDAQ. You would expect to have screaming volume. It wasn't. Hence, is it the start or is it the finish? Is it getting up there to trigger this stuff, to force a move, to force this continuation of the risk on trade? I don't know. But what I can say, we're in that fifth. And like the NASDAQ, I think we're going to finish a third, come down in a fourth, go back up in a fifth to finish the move. So there is where we have one. The C wave would be 1.618 times the length of the A wave at 55.73, which got touched almost today. We're barely below it. The high was barely below it. So that could be broken. What comes up next? I can add likely this level, 5,600. Now, what really kind of comes in? I don't have anything today, but there may have been, of course, this gets recalculated again. All of these, the models are rerun after today's trade. And so we may have something at 5,600. We had 55.25, and then we had 55.29. Now there is a level up at 57.26. Now the all-time high right now is 57.21 via the future. 57.26 is above it, and it's a very small level. We have additional for this fifth wave, if it really does a blow off top, at 57.46. So I don't have anything to really put in as to where we can start to put additional fib within it, because it just is now kind of going out. I can, however, maybe add one more here, but I think it's going to be up too high. Let's put that. This would be for that minute, excuse me, the minuet C wave. Yeah, it's way up here at 58. So that also breaks that high. So that would be a no. But I will say 1, 2, 3. Again, if this is all, and that's going to turn into minor 4, then we're in a minor 5th wave. And that would be ugly as it is. 1, 2. And then we have 1, 2, 3, 4, 5, 3, 4, 5. That should definitely take us above there. Again, same deal. I'm just throwing possibilities. And yes, don't be misguided by the fact I say I'm a day trader and that makes my life easy, because there are times during the day where you're like, I can't sit with this position because it's taken too much away from me. So, you still get caught up in stuff and you still can lose money, but most often we attempt to earn, at least I attempt to earn and show at least $300 worth of profit, which is the price of the trade room. And I try to do that every day, which is kind of saying, hopefully you can make that amount of money every day. And $300 a day is $1,500 a week is, you can do the math, $6,000 extra a month. Now that's just simple trading. Now, back to the S&P. I have to go and see where these next levels come in, because I don't see anything representative. We have exceeded all of them except that top one at 57.26, which is a new high. So I'm going to leave this as follows. I think we have a little bit more to go. Maybe 3's done. We just need a 4, and then we're coming up in a 5. And I'm going to be looking for not necessarily that level, but I'd be looking for this 100% level at 56.29 to possibly complete and control. If it starts to break, and again, I will have additional numbers that pertain to call, put, and gamma levels tomorrow morning. So if you're in the trade room, you'll get them. Now, also, by the way, if you're trading individual stocks, those same sets of numbers where we have collections of different things and different levels within individual stocks, it's also available. So another reason why you might want to come into the trade room, we will be trading the S&P, the NASDAQ. I will put them together for the Russell, the IWM, the spiders, the Qs. So there's a lot of very valuable information that's going to be provided within the trade room. Here, resistance, well, 55.73, but I have a feeling it's going to go by the wayside. And then 56.28. The 618 been exceeded substantially. So that throws the whole picture a little bit more in favor of this being minor 4, and we actually do go up and make a new high and put in a minor 5. So it does fit. I have presented it. We went across it the same way, that too fast, and we needed to have more time. This still can only be a B wave, and we come back down in a C wave, and it'll be a miserable fast C wave. If it happens, it's going to be really nasty. And for all I know, there's somebody big out there, some big institution out there, some big trading firms out there that are like, no way. And they just come in and they start hitting things and they start selling. And they will trigger plenty of things on the way down. And it could be them just getting out of position. Could be, who knows what's going to be behind it. I don't. But I will tell you, if it starts to come down, there are a lot of levels that will gather very quickly coming off all of this. Now, you're going to be more interested in like knowing where the volatility trigger is coming back down, where there might be large amounts of negative gamma sitting, that if that level gets broken to the downside, what happens to the trade is they get longer as it drops faster. And they get longer, and then they get longer until, they either cover or they go out of business. So both sides remain alive, folks. And tomorrow is an expiration. And there's an awful lot, I think, being bolstered in. Maybe for tomorrow's expiration, maybe for September's expiration. I'm not sure, but there are a lot of options are trading. A lot of options are trading. So we shall see. But again, there's your resistance, there's the next, and there's the top side, and that's new high. So again, we go too far above, I'm going to say too far above that, then no. This is an ABC, that's a minor 4, and we're going up in a 5. I know it's going to say, oh, we should have noticed before then. It's like the market hasn't been giving it. It's been giving hints, and I have been discussing it. That's the best I can do right now. All right. So in terms of numbers tomorrow, let's just see what we got. We've got consumer sentiment at 10 a.m., housing starts and building permits at 8:30 a.m., and that's it. So not a heavy day in terms of numbers for tomorrow. A couple at 8:30 a.m. Eastern and then at 10 a.m. Eastern. So again, the focus will be on the expiration. The next Elliott Wave Daily will be on Monday, August the 19th. And I will do a weekly update over the weekend.